Well, the market feeling tariff jitters as we approach a deadline. Tony Sycamore from IG joining me now. Tony, great to see you. We did just hear, though, that there has been an agreement reached between Japan and the US. Are we sort of getting that momentum of the taco trade again?
Big news this morning. I mean, Japan was certainly a big one in terms of one of the trade deals they needed. They does become the sixth trade deal. We've obviously got the UK, Philippines, Indonesia, Vietnam, and now Japan. And the actual tariff rate for me is a positive because it's below that 25%, which was threatened a few weeks ago. And I think given we have Scott Bessent heading to China next week to try and extend the trade deal that it currently has in place, it probably goes a long way to diffusing the impact of the August 1st deadline. So good news for me in terms of getting another trade deal in place and reducing the impact of this August 1 deadline. The EU probably still the outstanding one now. And if that one can be put to bed before August 1, then I think really we can just get on and trade the macros rather than worry about this tariff uncertainty, which has been lingering over markets for the better part of 3 or 4 months.
Yeah, absolutely. All right, well, let's have a look at the technicals and particularly what the ASX 200 is showing us after it hit a record on Friday.
Yeah, just looking at how the ASX 200 has responded this morning, it has been a positive response, but it was obviously a strong push to new highs into the back end of last week. And then we saw some very aggressive selling into the market on Monday morning. Now, this is a phenomena we saw about half a dozen times throughout 2024, where you'd get all excited because the market had been able to push to new highs. And then the very next session, heavy selling entered the market. So I find it quite fascinating. I don't know what the reason is, but you can see that what it has permeated into is some large selling in the big banks. But overall, the ASX 200 has held above the breakout level. Let's say that's sitting around 8620 to 8600. And while it holds above there, Jules, I think there's probably a chance we can extend the recent gains up towards 88.50.
What does it mean more broadly for our dollar, Tony? And we had the RBA minutes yesterday showing that they really just decided to err on the side of caution.
I think the biggest story is the US dollar, and that just continues to linger near lows. It is sitting on some support, so I'm not ruling it down and out at this point of time, but it has had a big fall and it's perched very precariously on some important support levels when you look at the DXY, for example, which is the US dollar index. But how that's played out for the Aussie dollar just continues to consolidate, moving sideways to higher, which is a pattern that's followed for the past 3 months. You know, the RBA, you mentioned they are going to cut rates more than likely in August and possibly once or twice more before year end. But bigger picture is just this uncertainty with regards to the US dollar. And the one particular issue, apart from tariffs, which is weighing on the US dollar, is this unrelenting pressure on the Fed and the Fed chair, which brings the Fed's independence under question. And I think that's one of the main reasons why the US dollar is flagging and why our Aussie dollar seems to be setting up for another move higher.
All right, now let's get to what we've been seeing in commodity markets as well, Tony, and particularly when you look at oil prices down for a third session. And this is really as these hopes fade of a trade deal between the US and Europe. But if we look at what's happened, particularly now we're just talking about US and Japan, shouldn't there be optimism that a deal will be reached?
Yeah, well, a couple of hours ago, the crude oil price wasn't looking so flash, heading back towards that support around $65 to $64. But it has bounced following the news with Japan. And as we said, that reduces the impact of that August 1 deadline. So, you know, if you're bullish on crude oil, you technically don't want to see it break below that 64 to 65 support area. And you don't want to see these trade concerns linger. So with some better news today, I'm hopeful that it can hold above that $65 support area and potentially get back up towards the $70 level, which it tested early last week.
And the trade uncertainty, Tony, meaning that gold is still being well bid.
Gold and digital gold, Jules, it's the same old story there. But I love what I'm seeing on the gold chart. It has been trading higher in a very, a bullish trend channel there. Had a couple of looks lower over the past fortnight, but was well met by demand there. And, you know, here we are at this point of time. We're not that far away from that 3,500 record high. So after testing and holding the lower bound of that trend channel, I think it's about time we started to explore and test some of those upside levels. So the next one is that 34.50 high you can see there back in June. And then, of course, we close in on that 3,500 high. And if that breaks, well, it's upwards and onwards up towards 37.50.
Speaking of upwards and onwards, we're looking very closely at crypto, particularly after the Genius Act was signed. I mean, I know we're looking at Bitcoin, Tony, but should we be looking at Ethereum and the altcoins as well? What is the Bitcoin chart showing you?
Well, the Bitcoin chart has been, I guess, broadly, I mean, this is the monthly chart, and I included that today because I think it's so important, the levels we are testing with regards to Bitcoin. That chart goes all the way back to 2018, and you can see there that obviously we've had a very strong month for Bitcoin, up about 12%, but it has it testing that trend line resistance, let's say around 123 to 125,000. So to answer your question, with Bitcoin doing well, but now hitting some fairly long-term significant resistance, and some of the altcoins doing extremely well, it does appear that we've got more rotation likely to take place. The other interesting thing, of course, is we've had three large wallets sell about $11 billion worth of Bitcoin over the past week. And that, to me, is a bit of a red light about Bitcoin potentially roaring higher. So enough caution there for Bitcoin. Yes, it does look good. It's still doing well, but potentially some of the altcoins, as you mentioned, just in a better place at this point of time.
Okay, and just a quick look at the NASDAQ as well, slipping, but that's ahead of some very key earnings reports, including the likes of Tesla.
That's right. Tesla and Google tomorrow morning, early our time. So it's going to be, I think the reports will be reasonably good. I think the bar for earnings season has been set too low once again. Seems to be a familiar theme with US earnings seasons. But that said, we look at some of the longer term charts. We've just looked at the Bitcoin on the monthly. For the NASDAQ on the weekly chart, there is significant resistance coming in around 23,400. So not necessarily will it be a case where a good couple of earnings reports tomorrow propel the NASDAQ significantly higher. But yeah, I could see it pushing up towards that 23,400 area and then potentially pause for a little bit more in terms of news coming out around what we're seeing in terms of earnings, of course, and whether this unrelenting attack on the Fed is going to continue. That seems to be the biggest wild card for me at this point of time.